Hello everyone, welcome to Just Invest Today. And in today's video, we are listening to Howard Marks talking about China. This is basically my Alibaba prediction, my forecast, my stock analysis, because he's talking about China and what he sees in the market. And William Green did an amazing interview with Howard Marks. And man, this guy is a godfather. He knows so much about the investment cycle, how to invest and what to do in these type of markets. So let's listen to what Howard Marks has to say about China, Alibaba, Tencent, all of these companies, because they're all based in China. When you have a chance, listen to the whole interview, but I'm just going to listen to this China segment because it's super important. Before we get into this video, can you please like this video and subscribe to my channel? I'm always providing you with so much new content, man. So like it and subscribe.
How would you think about China in that kind of nuanced way, where you're looking at both the dangers and the promise of the situation, and kind of trying to assign probabilities?
Yes. Well, one of my heroes was Peter Bernstein, the investment philosopher who died around '09, I believe. And he wrote a memo, which is one of the greatest things I ever read, called Can we reduce risk? Can risk be reduced to a number? And one of the things in there he said, there's a range. We don't know where the answer is going to fall within the range. Sometimes we don't know the extent of the range.
And that is basically China for you, man, because everyone has this thing in their mind that, man, it's either China goes down to zero, like that Xi Jinping takes all the money out of your companies, takes the company, privatizes it, does all that stuff, making it a zero, or China is the fastest growing market, which is going to go to all-time highs. It's like either or. There's like no in between when you're making this China investment. So there's a huge range right now that no one really knows.
China the range is enormous, because we're dealing with cosmic questions. And by the way, we think we can do economic analysis or financial analysis. These are not economic or financial questions. These are political, ideological, social questions. But it's an important question because China is the second biggest economy in the world.
And that's it right there. People are trying to predict what's going to happen in China and what's going on. So that's why so many people are avoiding China, Alibaba, Tencent, because there is this kind of uncertainty around what is really going to happen. Even though Xi Jinping has been coming out and saying that he's trying to amend relationships with US, he's trying to kind of see the US market and what they want and actually kind of succumb to that by actually letting regulators actually look at their audit books, talking to the American markets, saying, oh, we are going to abide by your rules, we don't want to have any turmoil. So who knows what's really going to happen in the future. And remember, markets hate that. They hate uncertainty.
And I have friends who can tell me the date on which it will become the biggest economy in the world.
And that's the biggest chance people are taking, that China is going to become the biggest economy in the world. It's just due time. They have so many people. They're building technology so fast, and it's just gonna be that. But who knows when?
I've always thought you should have money invested in China. And one of the things I've seen over my years in this business is something comes up, whether it be index funds or emerging markets or something like that. And people say, oh, we got that covered. I got 2% in that. If it's important, 2% is not enough. It won't move the needle. Now, people are happy with 2% because at least if it then goes on to quadruple, they can say, I participated. They don't have to kick themselves. But it's not enough.
So there you have it. 2% in China is not enough. And that's how a lot of people see China. It's either they put their 2% and it's like, oh, okay, I get a little bit of upside, or people like me, man, I have 30, 40%, probably a little bit more, 50 in China. So if China actually takes off, then I just have all of that upside and I get all of that upside. So it's kind of like an either or right now. So people can say, oh, you're taking so much risk, you don't know what's going to happen. But I just don't see where There's always a chance there's a black swan event with China if China just takes over Taiwan, some situation like that. But for some reason, in my mind, I do not think that's gonna happen in 5 years. Like I just can't fathom it. Even though it can happen, I'm not saying it can't. But man, if I can go 5 years, I know 5 years from now, Alibaba, Tencent, JD.com, they're all gonna be bigger than today. Guaranteed, they're all gonna be stronger, better companies. So if I can last that 5 years to maybe kind of sell down my position after like 5 years, just so I can get more balance because I see so much upside. And once I take some of that upside off and then get back down to like 10, 15, 20%, I think I'll be happy, honestly. But if you don't have enough in the market in China, then what are you really doing? You're not really investing in China, investing in Alibaba if you don't have that more allocation to that, because you don't get the upside. You barely get the upside if it ends up going crazy.
So if China is going to become the world's biggest economy, and if things work out in a positive way in the long run, 2% in China is not enough, in my opinion. And as you say, we've had investments in Chinese equities. We've been long-term investors in Chinese NPLs, and we're investors in Chinese credits, debts. How do you dope it out? Not easy. On the one hand, you do have the economic strength, size, and growth potential. On the other hand, you have the question of how will China behave towards its citizens, its businesses, and towards the rest of the world.
And that is the big $1 million question that no one can really answer, because no one knows what Xi Jinping is thinking. So that's why people like Warren Buffett are just avoiding this, because Warren Buffett is all about certainty of what he's doing and what he's investing in. He needs to see a clear path 10 years out. Like a 10-year clear path of knowing where this company is going to be. If he doesn't see that, he is not investing in it. So that's why you have people like Warren Buffett not investing in China, which does make sense. But I'm still young. I still can see a lot of upside. And if I make it out of this, you make it big. You're hitting the jackpot at that point.
And so in the last 6 months or so, we've seen people say China is not investable. That's the word, uninvestable. Now, my ears perk up when I hear that, because if nothing else, it introduces the possibility that China is cheap.
And that's it right there. That was the main thing for me. When people draw down these companies, these stocks so much, it just perks up your ears, like he said, and that makes us more attracted to that opportunity, because the lower the price, the better risk reward that we have for these companies. So that's why I was so heavily invested in China when the market crashed for Tencent, JD.com, and Alibaba.
By definition, nothing that people describe as uninvestable can be borne aloft on the winds of adoration. It's not overpriced. Maybe it's underpriced. Maybe it's something one should do. I'm not an expert in China. When I go to China, and they always say to me, "Well, what do you think about China?" I said, "Why are you asking me? You live here." But it has been my view for the last half a dozen years. What I tell people is that Europe and Japan are economic senior citizens. We're economic adults, doing fine, but I would argue that the best decades are behind us. China is an economic adolescent. And if you've ever had an adolescent in your house, as I have, then you know it can be tempestuous. And there are ups and downs. But you also know that the adolescent's best decades lie ahead.
So there you go. Are you willing to take that reward? That is the big question. There's going to be so many ups and downs and volatility with China. You already see it this year, which is crazy. The last 2 years have been crazy for Chinese stocks if you haven't been paying attention.
And I describe China as an adolescent, economically speaking. And this is an example of the ups and downs that I was talking about. Now, I didn't envision thing in particular. But when they come down on for-profit education, etc., and when the world worries about them geopolitically and militarily, that's what we're talking about here. When you get into the adolescence and the new things, stuff can happen. I happen to be positive on China. By the way, just like you couldn't prove the day after the Lehman bankruptcy that the financial system was not going to melt down, you can't prove what China's future holds.
And there you have it, man. He is bullish on China. He's very positive about China. He's actually going over to China to invest in like their bonds, their debt, and he even said he's investing in their equity. So you have to do what's right for you in your allocation and how you think about China, how you think about your safety in your own capital. So man, what do you think about this video, what Howard Marks said about China, about the Alibaba, Tencent, JD.com, because they're all in China, man. So we're doing this prediction of what is going to happen with these companies, man. So like this video, subscribe to my channel, and I'll get back to you in the next video. Peace.